the Divorced Girl Smiling Podcast with your host, Jackie Pilosoff.
No one should have to go through a divorce feeling alone and isolated. The Divorced Girl Smiling Podcast is a production of Divorced Girl Smiling, where every show is 30 minutes aimed to empower you, help you feel validated and understood, and connect you with some of the best divorce professionals in the industry. So grab a cup of coffee or a glass of wine and start smiling as you join us right now for the Divorced Girl Smiling Podcast. Heard everywhere podcasts can be found and always at divorcedgirlsmiling.com. Before we get started, I want to say something about people going through a divorce. Fear, doubt, and self-sabotage are three things that I think divorcing women are prone to. I mean, that was my experience anyhow, 18 years ago when I went through a divorce. Back then, I wish that I would have had the opportunity to get help. Now, what I'm talking about is a divorce coach. Specifically, Michelle Heffron is a life, relationships, and divorce coach who can help you get through these emotions and help get you back to a life that you really, truly love and that makes sense for you. She makes divorce so much easier and helps you figure out what you want your life to look like when it's over. I cannot say enough about how much I trust and like Michelle. If you want to learn more, you can find her at michelleheffron.com, and you can also find her in the Trusted Professional section of Divorced Girl Smiling. I also want to take a minute and tell you about a wonderful divorce lawyer. Her name is Colleen Breams, and she's a partner at Bierman, one of the best firms in the city of Chicago. I have gotten to know Colleen in the last year or so. Oh my gosh, sitting with Colleen is seriously like taking a magic pill that calms you and puts you in a great mood. Colleen has been practicing for over a decade. She is just such a lovely person, so positive, really, really smart. She's a great litigator, but she's also committed to practical and creative solutions in the mediation and collaborative divorce processes. If you want to learn more about Colleen, you can find her on the Bierman website or in the Trusted Professional section of Divorced Girl Smiling. What is a high net worth divorce? That's what we're going to talk about today. When a couple is going through a divorce and they have significant assets, property, income to divide, and it could get complex. And sometimes when people are in high net worth divorces, people try to hide money and play some little games because they can, because it's so complex and they're thinking the person's not going to notice. To talk about these things, I have with me a great guest. His name is Turner Thornton. Turner is a divorce attorney and a partner at Varghese Somerset, which is a Fort Worth-based law firm. Hi, Turner.
Hey, Jackie, good to see you again.
Nice to see you too. So what is a high net worth divorce? Is there a definition for it, or what does it mean to you as a divorce lawyer?
So I will tell you, from a technical standpoint, there's nothing in the family code, at least here in Texas, that specifically what, quote, high net worth would actually mean. In my brain, when I am meeting with a client, I will define that internally to be around $1 million and up. And in full disclosure, if you are close to $1 million or you have, a bunch of assets, it's very much an eye of the beholder issue. But attorney to attorney, I typically would define it as $1 million and upwards.
$1 million, including like the value of the house, or just $1 million in like investments?
I would say all in. So
Okay.
home equity, retirement accounts, liquid, etc. So that can come in many different, shape, forms, and fashions, because some folks have all money tied up in their home equity that in theory could still be tied as a high net worth divorce. At the same time, they could be living very frugally. I'll use Warren Buffett as the example, right? He still owns his old house. He still drives his old car. He has billions of dollars. So those are two different ends of the spectrum, but in theory, they're all relatedly the same thing.
All right. Now, when people go through, they have all of these assets and it's complex, and maybe they have a family business. Everything is more complex than it would be if they always say like, well, if there's nothing to fight about, it's going to be a really fast divorce. You're not going to spend any money. And the more assets and the more complex it is, the more money you end up spending. And one of the reasons is because people might try to get creative and go to extreme lengths to protect themselves financially, and they might hide money. Have you ever seen that happen?
I don't want to say yes, but the honest answer is of course. The reality is, and I mean this in a kind of blanket statement, folks that have been incredibly successful and they have earned a lot of money through their career are probably pretty bright and know how to handle their money, at least by and large. And if they don't, they at least have a network of people there to help them. So, to your point, if you end up with a high net worth person and they have all sorts of cash, accounts, businesses create big issues because to that end, they can kind of move money in and out, what's personal, what's related to the business, open a million different accounts associated with a million different businesses. And then all of a sudden, it's a tracing nightmare to figure out what is what. And at least here in Texas, what would actually constitute community property? In other words, you may think you have a high net worth, but that's only on paper. In reality, there's nothing to divide.
Yeah, I could totally see that. Okay, so when people are, you're right, they're really bright because they've been successful in building their business or working, and they know how to, like, get creative. So, you made a list here in this article you wrote for Divorce Girls Smiling about ways people try to hide money, and the first thing you said was investments. So what does that mean look like? Like, what do they do?
So I'll give a specific example without, of course, citing any names. So I have a client who is not the high earner in the marriage. Her husband is. However, he operates in the oil and gas world. So effectively, what he does is he moves money to and from various different investment accounts that he has that own what are called overrides, oil and gas wells. So he collects, a royalty every time that well produces. So as far as the community estate is concerned, at least here in Texas, the money that the court actually has the ability to divide, in my opinion, what he's trying to do is move money from what is his personal account into a business account, into these investments, into these quote overrides that are going to be deemed investments and say, hey, I don't have any control over that. That's not actually community property. That's owned by that investment account, meaning it's him with other different business partners, or he's a limited partner in this. Won't get too far into business structures, but he is an investor in something, meaning that money is tied up. It can't be divided because he's already given it to somebody else and it may go away eventually. So folks, again, try to get creative when in reality, all they're doing is trying to purchase assets that are going to build their wealth up even further.
Okay, wait. So 2 questions. How do you know about this, and what can you do about it?
So as as silly as it seems, the first question, how do you know about it, is the harder question to answer. Because oftentimes in a high net worth couple, usually it's one party that has brought in much of the wealth and the other party by and large is left in the dark. It may be a high wage earner man with a stay at home mom and they've got a few kids and she doesn't know what the husband does really for a living, that he works, to use the continued example, in oil and gas. And so now she's having to pepper me with questions and I've got to figure out which way is up. To tie in the second part of the question, that's when we bring in our legal team. And to me, that's going to be folks like a forensic accountant, business evaluator, things like that, people like that who have skills that I don't have that can provide information to me so that we can really figure out what the estate makeup actually is. How do
And it's really sad that somebody has to spend the money on that instead of the person just being forthright and saying what they have, especially if it's a long-term marriage and they have kids together. Really sad to me.
Exactly right. And what ends up happening to that point, if you don't know the information or let alone don't understand it from an attorney's fees perspective, the reality is you're going to have to spend more because the person who lives in that world has made the money, who knows the lingo, understands all of it. The person who doesn't understand any of it, it's necessary for them to get brought up to speed. And that takes time, which inevitably takes money.
All right, next way somebody tries to hide money is gifts. People give money to their friends. They say, "Can you hang on to this?" Right?
That's exactly right. And it's most common, in my opinion, between spouses if they're going to give money or even tangible things to family members. So let's say, for example, they have their own account. Even if it's a separate account here in Texas, it could be community property. So the court could divide it amongst the two parties. But they may move money from their separate account and, quote fingers, gift it to their sister, to their brother, whomever it may be. And now they say, well, that's not my money. I don't have that anymore. And therefore, the judge doesn't have the ability to divide it amongst the two of us. When in reality, they're just parking it somewhere else with the assumption that one day they will be divorced. That family member will then turn around and bring it right back to that person who gave it away.
So the sister's saying, okay, the $50,000 he gave was a gift. That was a gift to me, but then she knows it really isn't. She's going to give it back to him the second he's divorced. But
Yep.
isn't there like a maximum gift allowance without paying taxes, or does the person pay taxes?
So, disclosure, not a CPA nor a tax attorney. I cannot give tax advice. But to your point, yes, from a specific rule, at least that exists to my knowledge, from an Internal Revenue Code standpoint, yes, there are defined words as gift and what that allowance could be. The reality is that's going to become a reporting issue as opposed to will they do it or will they not.
Okay, so have you ever had cases where somebody actually paid tax for a gift because they hated their ex so much they'd rather pay the tax on it and give it to somebody? And also, at least, even if they have to pay the tax, at least they get to keep most of it.
Thankfully, no. What I end up having to do is, in a very lawyer way, define it as a loan and say, hey, they're not actually giving that to them. That is loaned to them. And here are the terms for said loan. And at the end of the day, it will be paid back over this amount of time under these particular circumstances.
Wow, I have a more devious mind than you.
Unfortunately, as creative as I'd like to think people to be, more often than not, they don't cover their tracks that well.
You're listening to the Divorce Girls Smiling podcast. My name is Jackie Pilosoff, and I'm your host. And today I'm here with divorce attorney Turner Thornton, who is a partner at Varghese Somerset. And Turner and I are talking about high asset divorces, high net worth, and how people hide money and how you can try to find it and what you can do. We're going to take a short break. When we come back, we have all these other ways to tell you about that your spouse might be trying to hide money and what you can do. We'll be right back. As a divorced mom who raised 2 kids, I struggled the entire time they were growing up, trying to work, taking care of them, and asking the same question night after night. What the heck am I gonna make for dinner? I wanted to cook healthy and I wanted to enjoy cooking, but I just felt intimidated in the kitchen and couldn't find the time to learn. Boy, do I wish I would have known Hannah then, although Hannah was probably still in diapers at the time. But now Hannah is a nutritionist, a holistic nutritionist, a wellness coach, a culinary instructor, and the founder of My Intuitive Health. Hannah is someone also who puts on retreats for people, and I actually went to Greece with Hannah and her group, and it was amazing. I'm part of Hannah's cook club now, where she has a cooking class once a month. Also, it's on Zoom with like all these other women. And then also you get recipes. Hannah makes cooking so much fun. It's so healthy. You feel great. It's so easy. And your kids will grow up enjoying cooking and good food. I'm telling you, get in now. If you want to learn more, go to myintuitivehealth.com. I also want to tell you about a great therapist. Her name is Julie Walton, and she's an LCPC out of the North Shore of Chicago. Julie has been a therapist for decades. She is so smart, so experienced, so compassionate, and she has a niche in helping women who are going through change, going through divorce. If you want to learn more about Julie, you can find her at northshorereach.com or in the trusted professional section of Divorced Girl Smiling. Welcome back to the Divorced Girl Smiling podcast. My name is Jackie Pilosoff, and I'm your host. Do you think that your spouse might be hiding money? If so, this is a great episode for you to listen to. My guest is Turner Thornton, divorce attorney and partner at Varghese Somerset, a wonderful family law firm in Fort Worth, Texas. And Turner and I are talking about some of the ways people try to hide money and what you can do. All right, next one is international travel and transfer. So I'm thinking of the movie The Firm.
A lot of people have probably, as they listen to this, the image of someone walking through TSA with cash strapped to their body, right? And as much as I laugh about it, the reality is folks that internationally travel frequently, A, may be flying privately, which tends to be a little different set of rules from a TSA standpoint. And B, in my experience and in my opinion, the purpose of going about it that way is with the thought that it's going to be nearly impossible to track. And to be totally frank, it's not impossible, but it's incredibly difficult. As you would assume, different places have different laws, and our ability to go through, let's say, a bank in Morocco is inherently different than getting a bank account information from Chase down the street. So because of that, it creates some real confusion on what's the best way to actually obtain the information that we can then educate our client and say, hey, it looks like they moved money from A to B to C to D. And when I say I gather that information, I say, we get that information to the forensic and they figure it out for us. And then we take that and present it to the court.
Okay, now you said that what someone can do is look out for unusually large amounts of cash withdrawn from their estate without even knowing what it was for. And that's when you know maybe your spouse is internationally transferring it.
Correct. I think cash withdrawals are typically easier to track from a bank account standpoint. Another thing that I would look for is large round numbers coming from convenience stores. So a lot of folks that are trying to get more clever with it will buy those $500, $1,000 gift cards that are American Express gift cards from a Walgreens. Because again, at that point, you're just making a big purchase at Walgreens. So it seemingly would be normal. But in reality, they're obtaining a cash card that they can then use wherever. So it's just, you have to be diligent about what is a normal amount that your spouse is spending. And when you see those flagged transactions of why are they at Walgreens down the street and they've spent $1,000, that's unusual. It's just something.
Yeah, I mean, that doesn't even seem to be that smart of a way to go. I mean, anyone's going to say Walgreens, $500. What? Exactly 500?
Right. And nowadays, depending on what kind of gift card you buy, it's 500 plus the fee, which is $7.95. So it's things like that. They may also be, depending on, this is not necessarily a high net worth question, but a hiding money question. They may be doing that over time. So they'll buy $100 here, $100 there. And then before you know it, they've got $10,000 worth of money on these little cash cards that they can spend wherever. And it's very, very difficult to track.
And so for people listening to this who are new to the divorce process, there's something called discovery where they have to turn over everything. So you can find this pretty easily if you see their bank statements.
Discovery in almost all divorce cases, high net worth or not, can be an incredibly helpful tool to figure out what the estate really is. In instances with a high net worth client, discovery is practically a necessity because, again, there's so much money movement going on. The numbers are so large. You may have to spend a decent amount of money on attorney's fees to find out the information, but wouldn't you rather spend $10,000, $20,000 to obtain it, knowing that your return could be upwards of 6 or 7 figures? So it is it's a difficult process and can be strenuous, but the return on investment, in my opinion, usually is quite high.
I'm sure it is. Okay, next one is underreporting income. How can people get away with that?
Get away with is a clever term. The way I would phrase it, and I'll relate it back to the business entities. A lot of business owners, when they are doing their taxes, will do anything and everything to have a loss on paper. That doesn't, in fact, mean that they don't have plenty of either cash at hand or they haven't been very successful in their year with their business. So from an underreporting income statement, and I think even in the article on your website, we talk about taxes as well. The reality is high net worth individuals with large amounts of cash flow, but they relate it to their business, are going to do what they can to have the minimal amount of taxes paid. And the way that you do that is through various things like depreciation and things of that nature, which really just means, hey, we do in fact have a lot of money. We just didn't have to pay a lot of tax at the end of the year. Our president is a great example of this, right? It doesn't mean that there's not money coming in. It doesn't mean that there's not money being made. It just means they have very good accountants to make sure that they're doing things according to the Internal Revenue Code that they're allowed to do. For our purposes, from a divorce standpoint, it means that we can't solely rely on a tax return. We need to be looking at things like K-1s, like cash flow from a bank, credit cards, things of that nature that give us a much more holistic picture of what, in fact, the estate really is.
Okay, so this is interesting, and I want to take a break from our list and ask you, why would somebody want to do this to their spouse? Why are they is it anger, resentment, fear that they're not going to have enough money? Just try to be a jerk because they're so angry. I mean, what are the reasons?
The most common reason is ego, in my opinion, because more often than not, if one party has earned the vast majority of the money in the family, their stance more often than not is, I made it, I should get to keep it. When in reality, the likelihood that they would be as successful as they are without the support of their spouse, man or woman, it doesn't matter. It's unlikely, right? So at least here in Texas, the way that the family code combats things of that nature is for a spouse to be able to ask for a disproportionate share of the community estate, which is just fancy legal speak for more than 50%. Okay, why should they get more than 50% if they didn't bring anything financially to the table? Well, the reality is many, many reasons. A, as I mentioned, their spouse likely wouldn't be as successful but for them because they would have needed to do more things at home, help with the kids, do whatever, right? In addition to that, that high net worth individual, assuming that they have a job moving forward that's going to continue to make them a lot of money, their earning capacity moving forward post divorce is substantially higher than, let's say, the stay at home mom who's been taking care of the kids and doing everything related to the house on a day to day basis. Because of that, at least here, it gives us the ability to say, Judge, we understand that he has been the breadwinner. However, she needs more of the lion's share of the estate now because that's what she's going to have to live on to support these kids for the rest of her life, potentially. So it's something to keep in mind when you're going through it, at least, again, particularly here in Texas. Just because party A has made all of the money doesn't mean that party B isn't entitled to it. It's completely the opposite, actually.
Okay, now do you see a difference between, let's say, the husband wanted the divorce and he's the breadwinner? Are those people, I don't know if we can generalize, tend to be a little more giving and less of doing this? And let's say, okay, the wife cheated and she wants the divorce, and now the husband's thinking, well, I didn't even want this divorce. So does that make a difference?
I would say, in a very lawyer way, it depends. I can tell you for high net worth clients specifically, usually the person that has made the money, more often than not, their goal is to get done as quickly as possible. Reason being, much like we've alluded to and discussed already today, the process takes time, the process takes money. Both of those things are factors that high net worth earners don't want to deal with. They don't want to pay the money to go through the process. They don't want to take the time, and I use the phrase emotional capital that is expended during a divorce because that's going to take away time from their business. So, in my experience, what oftentimes will happen is the high net worth person or the high wage earner, to give an example, like a doctor or lawyers in full disclosure, they'll try to say, hey, let's get this done quickly. Here's my offer. Get your lawyer, we'll write up paperwork and be done. And not to say that that's a bad way of doing it. Oftentimes that works perfectly fine. But again, if you're not the high wage earner, you're not the person with the high net worth individually, you need to be educated about what's there. And again, that's going to take time. So every individual case is different and unique. But the reality is, if you're going to be going through divorce, you need to make sure that you're educated about it and that you've done your homework and you're not just agreeing things for the sake of being done.
Right. Okay. That is true. But I do want to say one piece of advice I have given people, and you tell me if this is true. And I do always tell people I'm not a lawyer, but here's how I feel. If your spouse cheated and is leaving you for the other woman, and the person feels really guilty, the quicker you get the divorce over, the more that person is willing to give because they're still in that stage where they feel so guilty and they feel terrible. I think that if you let too much time go by, they get kind of used to it, things start getting ugly, and then they're like, they completely shift the other way and the deal goes away.
I think generally speaking, that's probably true. I call that a divorce tax. And what I mean by that is this person feels bad about the situation. They know, at least in the current moment, they believe it's their fault that they're going through this. And because of that, they're willing to give a little bit more than they may down the road. Does that little bit more mean, at least from a 50-50 standpoint, 1% more, 10% more? Who knows? It's certainly worth the conversation. I will certainly say that.
Okay, let's continue these because we're kind of running out of time. But how about overstating debts? Do you see a lot of that?
I would say that's probably the most common across all uh, economic classes within a divorce. And the reality is, when we go to court on a temporary order, so here in Texas, if you need some rules to live under while your case is pending, here in Tarrant County, where I am in Fort Worth, we're required to bring an income and expense statement, a financial information sheet to say what you earn and what you pay on a month over month basis. The reality is so many folks will purposely overstate what their expenses are with the thought that, hey, if I say it takes me $30,000 a month to pay all of my bills, I won't then have to pay my spouse temporary spousal support or temporary child support or something of that nature. Again, going through all the various statements will likely disprove those ideas because some folks will try to double dip in certain ways. They'll say, hey, I've got a credit card bill that's, $3,000 a month. Okay, great. But you also listed your utilities at $300 a month. How do you pay those utilities? With the exact same credit card, right? So in reality, they are trying in this hypothetical to double dip where they can, raise the expenses as high as possible to tell the judge, yeah, I make a lot of money, but what goes in must go out.
All right. Now, the bottom line of all of these things that we're saying is that if people try to cheat and trick you and do all that, it can be found out, and then the case gets a little bit more complicated. There's more anger and resentment. A judge probably doesn't like it. So what happens when you find the assets? Now the person's credibility is gone, and what happens then?
A couple of options to use your example. I think you certainly have the ability to plead, at least here in Texas, what's called fraud on the community, meaning you are purposefully doing things to deflate the community assets. We were able to figure it out. And now that we know that, we want more of what the pot is. So let's use an example. Hey, you've been moving money around. You've been selling off things. You sold something. I didn't have any say in that asset, and now it's gone. So our entirety of the estate is reduced. Well, judge, I want you to divide the estate as if that money was still here. So let's use $1 million as an example. If that person moved $100,000 and now they say, hey, the estate's only $900,000. And therefore, if we're going to get 50-50, I want 450. My spouse should get 450. Uncle, no. We're going to divide it as if it was $1 million, and we're still going to give that excess to your spouse. So in this hypothetical, now it's 600 to 400.
So it's almost like a punishment.
Absolutely.
And
out. I will tell you too, to use your example, if there is fraud that has been committed and if it subsequently is found, you get a lot more settlements that way because they're not going to want to go plead their case in front of the judge.
See, if my lawyer told me that, I would be so happy to hear that because you're going to find it. And so it's kind of like you probably say to people like, don't worry, we're going to find it. And then you're going to come out even better after we find it.
The saying that I use is facts that are bad for life are good for litigation. So is it bad if your spouse is moving money around? Of course. Is it good if we find it? Of course. That's only going to help your case in the long run. I hope it doesn't happen, but if it does, there are remedies.
Turner, thank you so much for taking time to have this conversation. It was very complicated, but I think you did such a great job in kind of breaking it down for people who are going through this. Thanks.
Of course, Jackie. Great to see you again, as always.
And if you like what you heard and you want to talk to Turner and have a consultation, you can find him at versustexas.com. And you can also find Varghese, Somerset, and Turner in the trusted professional section of Divorced Girl Smiling, which is divorcedgirlsmiling.com. Thanks so much for listening, everyone. We'll talk to you real soon.